Hey folks, this is Bill Gates here, and I've got to tell you about some terrible news that's hitting Donald Trump right now, the kind of info he and his team have been trying to bury, but it's all going public and it's not pretty. You know, as someone who spent decades looking at data, innovation, and how economies really work, from building Microsoft to tackling global challenges through philanthropy, I can see the cracks forming in the US labor market. And it's like the beating heart of our whole economy is starting to falter. Everything else is built on it. And now with government and private data finally lining up again, like the recent reports from the Department of Labor showing initial jobless claims diving to 191,000 for the week ending the 29th of November 2025, which is the lowest in over 3 years, according to Reuters and Bloomberg. It's clear even the so-called good news is masking some bad stuff underneath. That 191,000 beat predictions of 200 to 220,000, and continuing claims edge down to 1.939 million. But the reasons behind these numbers are actually pretty grim. I've been digging into reports from sources like Reuters, Trading Economics, the Fed's own analyses, the Bureau of Labor Statistics, the Wharton Budget Model, Politico, the New York Times, JP, Morgan Global Research, Tax Foundation, USDA announcements, The Economist, the Budget Lab at Yale, Fortune, Sepper, and staffing industry analysts. And it's all pointing to the same thing. The top of this K-shaped economy is pulling further and further away from the bottom faster than ever. And with the Trump administration pushing reckless programs like those massive tariffs that are crushing small businesses, leading to layoffs up 24% year over year, according to Challenger, Gray, and Christmas, and even a 54% spike in total job cuts to over 1.17 million for 2025, as per USA Today. They seem hell-bent on turning this country into some kind of feudal setup with lords and serfs. There's not much we can do short-term, but knowledge is power, and there's a blueprint for Democrats to follow if they've got the guts, think FDR and Harry Truman styles. You ready to dive in? Me too. Let's break it all down. Okay, we're going to layer this out to show how easy it is to cherry-pick data and spin whatever story you want. Starting with the government stuff that didn't look all that terrible on the surface. Take initial jobless claims. Market was expecting 200 to 220,000 that week. So when it came in at 191,000, there was all this celebration. Some folks chattered about it not being fully accurate because of Thanksgiving, but I checked historical data from the Labor Department going back years, and there's no real material difference for that week. So chalk it up as a win, sort of. But let's zoom out a bit. Trading Economics confirms that drop from 218,000 the previous week, and the 4-week moving average fell to 207,750, which sounds stable, but it's deceptive because the unadjusted figures show 226 claims in the same week last year, meaning we're not exactly booming. In fact, as Politico reported just hours ago on the 8th of December 2025, corporate executives are already warning that Trump's tariff costs will hit consumers hard as pre-tariff inventory runs thin, with prices rising as soon as January, right after the holidays. This ties directly into why these jobless claims might look low now, but the underlying pressures from tariffs are building up, forcing businesses to hold off on hiring or even start laying off as costs mount. Then there's continuing claims, 1.9 million people still on unemployment rolls, which was a bit under the previous week at 1.943 million. So that got spun as positive too. The Wall Street Journal notes it was 194 million for the week ending November 22, indicating people are taking longer to find jobs, which ties into broader worries about prolonged unemployment. And when you look at the New York Times article from the 8th of December 2025, Trump is insisting tariffs will buoy the economy and ease cost concerns. But the reality is they're putting upward pressure on prices, putting his administration on the defensive over public anxiety about affordability. This isn't just talk. JP Morgan Global Research updated on the 5th of December 2025 with analysis showing how these tariffs are rippling through supply chains, affecting everything from manufacturing to retail, and ultimately hitting the labor market by making it harder for small firms to compete. And the last bit of government data that Wall Street and Trump economists love to tout as proof the labor market's holding up, prime age labor participation. They've called it softening on Wall Street, structural weakness from Fed officials, and resilient from Trump folks. That's what makes this so tricky to parse. But prime age participation for folks 25 to 54 is still near peaks at around 83.7% as of September 2025 per BLS data. That's the most productive group, the core consumers. To put it in perspective, the total participation rate for everyone over 18 hasn't been this low since the mid-1970s post-pandemic. Does it matter? Absolutely. And here's why. From Fred and Hamilton Project reports, the prime age population has been flat since the financial crisis, with boomers aging out and millennials not fully filling the gap yet. So a flat participation rate in a shrinking cohort means it's less impactful than it looks. That's why only 62% of the population over 18, not in military or school, is employed. Factor in under 18 seconds, military students, and less than half our total population is working. Hang on to that because it ties into inflation, admin policies, and what's next. The Tax Foundation's tracking of the Trump tariff shows they amount to an average tax increase of $1,200 per U.S. household in 2025, which is exacerbating this divide, making it harder for the bottom half to participate meaningfully in the economy. These releases might not jive with overall consumer confidence and job sentiment, which looks stable on the surface, no cliff drop in the labor market. But the Chicago Fed estimated the jobless rate around 4.4% in November, up slightly from the BLS's 4.3% in September, showing subtle weakening. The BLS's employment situation summary for September highlighted that the unemployment rate held steady, but with revisions, we're seeing structural issues bubbling up. And let's not forget the USDA's announcement on the 8th of December 2025 about $12 billion in farmer bridge payments to offset tariff impacts. President Trump signed an executive order to combat price fixing and foreign influence, but this is essentially a bailout because tariffs are hurting American agriculture so badly. That's why I started with the headlines. The real story is what's cracking below. Now, for the nuance, the nature of work, of that 62% employed and 83% prime age. Remember, part-timers, gig workers, anyone who worked one paid hour in the last 4 weeks counts. Quantitative numbers hide the quality. Private data fills that in, like ADP's report showing private sector job losses accelerating, especially among small businesses. Firms over 50 employees are holding steady or growing per trends from JEC and CNBC. But small biz losses are overwhelming. At ADP specifically noted small establishments lost 120,000 jobs in November alone, blaming tariffs for raising costs. Consolidation's a huge problem. Big firms dominate with wage suppression and price power, not passing gains to workers. Tariffs adding $250 billion in duties are hitting small guys hard, creating a Darwinian setup where big companies eat margins to keep prices level, but small ones can't, leading to bankruptcies, foreclosures, repos, student defaults, credit card debt spikes. Reports from The Guardian and NYT show Trump's tariffs have driven massive small firm closures and layoffs, with a Joint Economic Committee report from May detailing price hikes and layoffs directly tied to tariffs, forcing small businesses to cut staff or shutter. The New York Times in September described how small businesses are withering under these policies, lacking funds to stockpile goods before tariffs hit, reluctant to raise prices on customers already squeezed. USA Today reports year-to-date job cuts at a 5-year high, up 54% from last year. Challenger noted November announcements up 24% from 2024, totaling over 1.1 million for the year so far, almost 30% higher for 2025. Holiday hiring's the lowest since 2009. And The Economist Interactive on the U.S. economy under Trump shows annual inflation at 3% in September 2025, up from 2.9% in August, with firms paying average import duties around 10%, which is feeding into this labor weakness. Deeper on quality, declines in business services, upticks in education, health, hospitality, reflect demographics, younger folks staying in school longer due to no jobs, boomers needing more care and leisure, traditional GDP boosters like manufacturing. Downtrend over the past year, despite reshoring hype, no real industrial policy beyond tariffs, which hit raw materials hard. The Budget Lab at Yale's the 2nd of September 2025 report on short-run effects of 2025 tariffs notes that tariff-sensitive employment has grown, but less than pre-2025 trends suggested, with a noticeable difference that's widening the K-shape. Trump rescinded renewable credits for EVs, solar, wind, and Supreme Court uncertainty on tariffs froze decisions. Meanwhile, Canada forges new ties, China deepens in Africa, Latin America, Europe. We created globalization and bailed out a self-inflicted wound. Planned hirings and layoffs from Challenger show November down from October, but up 24%, YOI, with 2025 layoffs heading to 30% higher. A WBUR piece from October highlighted how Trump's tariffs are squeezing small businesses, creating uncertainty that's led to more closures. The Center for American Progress in September outlined 8 ways Trump's turbulence tax from erratic tariffs is costing the economy, affecting consumers and businesses alike. CNBC in October detailed how much these tariffs are costing small firms, with some warning of potential shutdowns if relief doesn't come. Fortune's the 15th of November 2025 article cites Fed researchers saying tariffs actually lower inflation because they're demand shocks that slam employment and economic activity. It's a twisted silver lining where prices might not spike as much, but jobs get hammered, which aligns with what we're seeing in the data. Last puzzle piece, immigration reform and deportations. 2025 is one of the only non-war years with negative migration per PIIE and CFR data, impacting harvest seasons, holidays, skilled visas in tech, finance, medicine. The Federal Reserve Bank of San Francisco noted net migration close to 500,000 in 2025, down from 2.2 million in 2024, which is already showing in labor data. Early research by next year will show broader effects, but anecdotally, lower jobless numbers, partly from less immigration. Double-edged, Trump folks say it proves immigrants took American jobs, but Fed economists call it a disaster. We rely on low-wage migrants to suppress wages and inflation. The Wharton budget model projects that mass deportation reduces wages for high-skill workers too, affecting 63% of the workforce and shrinking GDP. The Economic Policy Institute warns Trump's agenda could destroy millions of jobs, both immigrant and U.S.-born, especially in construction and childcare. CFR reports since 2025, job growth in undocumented reliant industries has been weaker than the private sector overall. The American Immigration Council in August detailed how Trump's actions are tolling local economies, with states heavy in undocumented construction seeing employment drops. A scholarly piece from you and I, EDU in October outlined how deportations lead to reduced economic growth in agriculture and construction. Econofact in November explained tighter curbs reduce labor supply, impacting growth. The JEC in December called mass deportations a catastrophic blow, shrinking the labor force. costing US-born jobs, raising costs for all. Science Direct Research estimates a 5% labor force reduction in short to medium term. NILC in October forecasts a 7% GDP drop from mass deportations. And tying back to tariffs, Sepper's column from 6 days ago on the economics of the second Trump administration notes inflation running around 3% above the Fed's 2% target, with Trump railing at the Fed despite his policies fueling it. Welcome to capitalism. It thrives on exploitation. That's why nativists and libertarians clashed in the GOP both need a bottom rung. No wage growth across levels shows weakness. Economy shrinking, GDP growth only from capital investments like AI, data centers, and stock gains. Strip those. We're backward. Economists say era of 200K plus jobs. Month is over. Expect negatives. 30, 40K as banner. In months, Trump altered reporting and choked growth for decades. Staffing industry analysts reported just 19 hours ago that the U.S. economy will muddle through early 2026, with tariffs imposed throughout 2025, moving through supply chains, raising goods prices and pressuring consumers and businesses. But labor's point is purchasing power leading to inflation. Trump touts 3% inflation as victory, up from under 3% at Biden's end, per BLS and CNBC, with CPI hitting 3% in September 2025, the highest since January from 2.9% in August. PCE, the Fed's preferred gauge, rose to 2.8% in September from 2.7% in August, per BEA and CNBC, with headline PCE up 0.3% monthly. Needed deflation to restore pre-pandemic power, but that'd mean recession. Best was ticking to 2% Fed target with wage bumps for soft landing, but cyclical PCE, housing at 4%, acyclical health, finance low, 2 seconds food 36% higher than pre-pandemic. The Treasury Borrowing Advisory Committee noted headline PCE at 2.7% through August, but it's ticked up. CNN reported consumer spending stalled in September as inflation held sticky. Core PCE at 2.8% annually. House Democrats' Boyle statement slammed Trump for cost of living claims amid 2.8% PCE. Barron's noted the 2.8% rate is old, but signals risks. Admin gaslights with 4.3% unemployment, 95% working implication, and 4% wage growth beating 3% inflation. But wages apply to less than half. Kids eat, fixed income seniors eat. We're charging it credit debt at 22%. Interest funds, food inflation, tariffs, military tax cuts, $1 trillion debt interest. And with Politico highlighting that there's only so long before tariff costs hit consumers fully, as businesses warn price hikes in January, this credit bubble is about to burst. Teaser for admin's plan, deeper dive soon, but broad strokes, revenue from taxes, tariffs, debt. FY 2026 kicked off October 2025, post-shutdown, October deficit $285 billion per Treasury. Medicare, Social Security, biggest expenses as population ages. Corporate taxes, $15 billion. Tariffs, $31 billion, not the trillions promised. Less than magnificent 7 earnings monthly. Through world trade into disarray, forced new partnerships, hiked inputs, killed small biz for peanuts, expenses, $100 billion defense trending, $1.2 trillion, year to blow up boats, $91 billion debt service, yields sticky, 30-year near 5%, 10-year above 4% per Schwab and Fortune. Market sees U.S. as risky. Treasury fiscal data shows FY 2025 deficit at $1.78 trillion, down slightly but massive. Trading economics has 10Y yield at 4.17%, highest since October. WSJ notes yields rising as layoff data falls, but CNBC in October had 10Y at 4.142%. UBS in November saw 10Y at 4.16%. Schwab's 2026 outlook warns 10Y may not fall below 3.75% even with Fed cuts. MarketWatch says yields pushing higher despite Fed easing. Reuters poll, long yields elevated at 4.1% in months due to inflation, debt. Annaly in October, yields little change net. Treasury lets long-term expire, issues short-term more yields up off floor, cutting core wealthy taxes while spending high guarantees deficits. BPC shows $1.8 trillion FY 2025. Tariffs made manufacturing less competitive, lost jobs, taxes more debt, higher yields, vicious cycle. And with JP, Morgan's insights on how tariffs are disrupting global trade, this cycle is accelerating. Admin plan, keep tariffs workarounds if SCOTUS strikes, believe no tax on tips. Social Security gives $1,000 refunds. That's it, covers health subsidies expiring, costing average American $1,000 more. Fresh out of ideas, praying it works. We're out of luck, out of time. Data's there if you look. To really drive this home, let's think about the human side. I've seen in my work with the Gates Foundation how economic policies affect real people, farmers in the Midwest struggling with tariff retaliations from China, small business owners in urban areas cutting hours because import costs skyrocketed, families dipping into savings just to cover groceries that are 36% pricier. The USDA's $12 billion payout is a Band-Aid, but it doesn't fix the root cause. Tariffs that were supposed to protect American jobs, but instead led to slower growth in tariff-sensitive sectors. As Yale's Budget Lab points out, Fortune's Fed research twist that tariffs deflate via demand destruction means we're trading jobs for lower inflation, but at what cost? Unemployment might not explode yet, but the quality of jobs is plummeting with more folks trapped in gig work without benefits. Expanding on immigration, the negative migration in 2025 isn't just numbers, it's empty fields during harvest, tech firms scrambling for talent, hospitals short on staff. Wharton's model shows GDP shrinkage, EPI's millions of lost jobs. These are cascading effects. Sepper notes Trump's Fed attacks ignore how his tariffs keep inflation above target, creating a policy mess. Staffing industry's forecast of muddling through 2026 assumes no major shocks, but with tariffs fully biting in January per Politico, that's optimistic. On inflation, the uptick to 3% CPI and 2.8% PCE is stubborn, driven by cyclical factors like food and housing. Trump's defense in NYT ignores how his policies reverse Biden's downward trend. Consumer spending stall per CNN means weaker demand ahead, tying back to labor softness. Fiscal side, that $285 billion October deficit is staggering, with tariffs bringing peanuts compared to promises. Defense spending at $1.2 trillion trend wasteful as we blow resources on unnecessary conflicts. Debt service at $91 billion monthly is unsustainable. Yields refusing to drop signal market distrust. Schwab's outlook, Reuters polls all point to persistent high rates fueled by deficits. BPC estimates at $1.8 trillion. In sum, this data dump is Trump's nightmare public exposure of how tariffs, immigration crackdowns, and tax cuts for the rich are tanking the economy for most Americans. It's not just numbers, it's lives disrupted. So, if you love this breakdown, hit subscribe, share it wide, and let's push for real change. Sign up for updates and join the fight for a fair economy today.